Potential reversal signals allows the candlestick investor to identify what type of chart is developing and when to get out of short position and into long positions. For example, today the Dow gapped lower and started trading down. Anytime you see that gap down, especially near the bottom of a trend channel, it pretty much tells you to start watching for a potential reversal signal. That goes along with the Japanese rice traders professing that where do most people sell? They panic sell at the bottom. So once we saw that gap down, we started watching to see if there was going to be a reversal. In this case, today, the Dow created a bullish engulfing signal with what we call a booster on it. Makes it that much stronger. Now what we need to see tomorrow is confirmation, which is a positive open or at least bullish confirmation of the reversal with bullish trading. And more specifically, we'd like to see it start trading back up above the T-line. This bullish trading today, in conjunction with the NASDAQ bouncing off the 200 and doing kind of a piercing signal. Piercing signal is very simple. It opens lower than any of the previous day's trading and then closes up at least halfway up the previous candle. Stochastic starting to curl back up. May not necessarily mean we're in a strong uptrend, but the analysis now can be that maybe for the next day or so, they will be bouncing back up to the T-line. If it fails at the T-line, obviously we're still in a downtrend, which tells us if this is a trend channel, with this as being the top and this being the bottom, we're heading down further. On the other hand, if they take it up to the T-line and go through, we can pretty well assess that there's a trend channel in progress, that our next uptrend may be fairly strong because it didn't get back to the bottom of the trend channel, starting to head back up to push on this level. And being able to analyze what individual commodities are doing, such as we've seen in the gold chart, that got back up to this level, gapped up today after a doji, traded much higher, but the warning signal was that if it came back down through the open, you want to start closing out gold and gold stocks, because that tells you they've failed at this level. You're probably going to do some sort of sell signal. In this case, we do have a shooting star bearish left-right combo telling us the probabilities at this level was the top is extremely high. It might not be time to go short on gold and gold stocks. That same analysis can be used for analyzing what's happening in crude oil. When it broke down through the T-line, making the next areas either the 200 as a support or down here into the 50-day moving average area. So with that, at least we know we have a target, and we know that the oil stocks are probably going to be trading lower. So we either be out of those positions or continue to go short. That'll be it. We'll see you in the chat rooms.